Hey folks, welcome back to Real Estate Investing Unmasked. Today I want to say Merry Christmas. This has been an odd year in so many ways. In 2020, things went really crazy. I was expecting for 2020 to be a year when real estate really took a dump, and there were many reasons for that. But come March of 2020, everything went crazy. So what happened? So as a recap, with COVID, it wasn't that COVID necessarily was going to cause everything to go up in value. That was actually an unintended consequence. What happened is the Fed wanted to increase inflation. You had the United States government that wanted to give money freely to keep the economy going when everything was shut down. And so when you are pushing more money out and inflation is the desired result, you're going to have more money flood into the market, even if people aren't working. And when money is flooding the market, prices go up. That's what inflation does. And the Fed wants inflation to take place. That was made very clear this year in multiple ways. You had the meeting that they had in the summertime where they said, yeah, we want inflation to go up. We think Americans need to learn that inflation is a good thing. I don't know if that's a good thing, people, but there are some good things that can come from inflation. There's some really bad things that can come from inflation. So you want to make sure you keep a lookout for those things. So in 2020, a lot of us investors expected the real estate market to go down before 2020. Once we got into 2020, however, we started watching the market and saw what was happening. And a lot of people, when they started having to work remotely, they got out of Dodge. The first people that noticed, hey, I don't have to stay in San Francisco and I don't have to stay in New York, I'm out. And I think that was a wise move. Real estate prices were really high in those areas, and by being able to work remotely, they were able to get out of there, get out of those cities, get out of the mega towns, if you will, LA and San Francisco, and they were able to take that same money and move it to somewhere where it had more value. Texas got a huge bump from people from California. Florida got a bump from people from New York, and there are a lot of restrictions all over the country. Those restrictions had caused a lot of people to change where they wanted to live. In California, I know here where I live, the restrictions have been very tight. Governor Newsom has made them very tight several times, loosened and tightened and loosened and tightened. What that's done for real estate, again, is people are leaving the cities and going into the suburbs. Things that people didn't think would happen as quickly as they did. There's always some suburban crawl where people will leave the city and go into the suburb, and that's almost like a rite of passage for people who start off in life and gain. They go out into the suburbs where they can afford a nice home away from the hustle and bustle, but still be close enough to commute in. Well, with a work remote going on, there's no need to commute in. So you get to have the very nice house, a very big house, for half the cost. And honestly, that's what I did this year too. I also picked up and I moved. And I bought a house that was about a third of the cost of where I was living before. And it's a bigger home with more land. So um, that is something that has happened quite a bit. So because that happened quite a bit, there are areas like the area that I'm in right now that are skyrocketing in price, in appreciation. So you're going to find that's going to happen even more this coming year. You've got big companies like Facebook, Google. You've got even Tesla is moving out of California, it seems. You've got a lot of big businesses that are saying, we're done with the big politics of the big cities that are charging us a bunch of tax. We're going to go someplace where we can get taxed much less. So what you're going to see happen with that is areas like Texas and Louisiana and Florida, you're going to see those house prices probably go up because there's demand that's heading in those directions. In places like California, you still will have prices that will either maintain or still go up. And the reason for that, a lot of people are expecting them to go up as much as 7 or 8% this year, this coming year in 2021. And the reason for that is the demand. there aren't enough homes on the market. The inventory is still super low, and they aren't able to keep up with demand in building. And the price of wood has gone up, construction materials have gone up through the roof because so many people are wanting to build outside of the big cities. There was some damage that was done by tornadoes and hurricanes and stuff, and that happens every year. So you're also seeing supply lines that are being affected because of COVID, where there are fewer people, or maybe in some states they say, you can have 50% of your workforce or 25% of your workforce. So that's caused some of these transportation lines, ways that we transfer goods back and forth, to kind of cut back on what they can do, which causes a suppression in supply, and the demand is just as high as it's ever been, which causes the price to go up. China was closed down for quite a bit of time earlier in 2020, and because of that, same thing, you've got some prices that go up on those things. Whether the prices go up for you as the consumer yet or not, that it doesn't always happen immediately, but it does eventually go up. At first, the businesses took it on themselves. They said, hey, this COVID thing's only going to be a small thing. It's going to be a month or two, maybe 3 months. We'll take the cost on ourselves, and we'll bite the bullet. Well, as time goes on, they can't bite the bullet any longer. You got big companies like Chevron having issues, ExxonMobil having issues. You've got the airlines having issues, looking like they're going to be bankrupt. They have AMC, looks like they're going to be bankrupt. The stock market's been crazy this year. You can see the companies that prepared for a rainy day. You see the companies that aren't affected by a recession or a depression. And for people that earn that W-2 paycheck, it's really important that you look at those kinds of companies for support, for security. If that's what you're looking for security, that's what you can get. The reason why you're here, the Real Estate Investing Unmasked, is you want to have an idea of what's coming, or you want to have an idea of how to buy something. Now, I will tell you, for me, my projects for 2021 for you is I am working on, right now, I'm working on a project of how to buy a house. I realize there are a lot of people that have asked me, Bob, it's great, investing in real estate, but I don't even know how to buy my first house. And so instead of maybe going through some of the techniques on how to invest in real estate, the different techniques like subject to buying foreclosures, fixing and flipping, fixing and holding, buying and holding, etc., tax lien certificates. Instead of going through those necessarily, I think what I'm going to do on my projects for 2021 is to release a series of videos of how to buy a house. I've already released the first one, and there should be a whole bunch to come. So don't forget to subscribe for that. If you haven't subscribed already, that's what's coming forward. For 2021, a lot of the things I've read have pretty much stated that they expect the market to go up some more. This isn't over. The pricing going up isn't over. You've got a lot of people who ended up buying now because they could. They were just holding on. They really felt tied to the cities. Now they can commute, so they left. And I think what you're going to find in 2021 is, as people get the vaccine and as people feel a little less worried about going out and amongst the public, you're going to find a lot more people seeing homes. You're going to find people that weren't willing to move before see all their peers move and say, well, I can sell my house too. I think you're going to see houses put up for sale. And certain markets, like in mine, in Southern California, a lot of those houses are going to be gobbled up, and they're gonna sell for higher than what the list price is. In other cities throughout the United States, you're gonna see a lot of the same thing in the cities, but you're gonna see a lot of that urban sprawl change and go back to suburban sprawl. You'll even see some people that move back out into the countryside that probably wouldn't have before, but maybe grew up there. I grew up in the country. I was raised in a little town in Arkansas, where there are only 300 kids in the school, kindergarten through 12th grade. So I've been there, and I've been in New Mexico, in Albuquerque, where I was one of 1,200 freshmen my my freshman year. So I've seen both sides of the cities, in the suburban and even in the country, in the rural areas. So you're going to see some of the rural get taken up. There's going to be an uptick in the values out there. As far as rent goes, it seems like the rent is going to remain stable. It could even go up just a little bit, but it's probably not going to go up as high as the prices right now. as far as home ownership goes. Home ownership is getting more expensive because prices are going up. But here's another big thing that happened in 2020. Interest rates went down. Interest rates went the lowest I've ever heard of. We're talking 100-year down lows. I've heard some people getting their loans as a 10 or 15-year loan in the ones, and we're talking like 1.8, 1.7. We've seen some really low interest rates, and what that does is it keeps your payment low. Now, if you've seen my videos, you know this concept. I've mentioned it many times. I'll mention it again. That if you buy a house, when you buy a house, whether it be for investment or for yourself, it's almost always you look at what is the bottom line. What are you going to be paying each month? Interest, whatever, principal, whatever, taxes, whatever. Altogether, what am I going to be paying? If the interest rates go down, you can afford more house. So if you can afford more house, you're going to buy more house for the same payment. So for instance, maybe it's a $300,000 house is what you wanted, and you could afford this much. Well, interest rates went down. That means more value is up here, and you maintain that low payment. If interest rates go lower, you can go even more expensive and have the same payment. Now, when interest rates go up, your payment goes up. And usually what happens is either the cost comes down because people are like, oh, I can only afford this payment. So there is inflation to your paycheck. Hopefully that did happen this year for those who are employed. For those who are unemployed, the only thing I can say is take the expertise that you have and turn it around into something positive. Use that to your advantage and go find something that can support you, that can pay you what you're worth. Fortunately, the United States government, for those that are living in the United States, has really helped out with unemployment. But I think it's time that you take the reins and find something else that's in your wheelhouse. If you haven't been willing to move before, or don't feel like you could have moved before, it's probably time to move. Over and over and over again, you hear about stories in the Great Depression about what people did to get by. I know for me, anytime I could talk to somebody who's a centurion who lived during the Great Depression, back in the 90s, early 2000s, I would constantly ask people that had lived through the Great Depression what they did to get through it. And quite often it was move, go somewhere else. And you may feel trapped by town, or may feel trapped because you have family close to where you are. It may be time to just get up and move. And now more than ever, you have the ability to work remote. So if you're out of work, look for that work remote job that can get you started and start bringing in some income, and then find you a place that's easily afforded. And then one of the biggest ways you can increase your value, your personal worth, your net worth, not your personal worth, but your personal net worth, is to buy a home. So get out of debt, have an emergency fund, buy a house, save up for an investment, and invest. So I hope you the best in 2021. I wish you a Merry Christmas. And I hope that you like this video. If you didn't like this video, I understand. But if you did, and you want to see the stuff that's coming down the pike, give me a thumbs up, subscribe to my channel. There's going to be a lot of interesting things coming down. I already have a lot of interesting things posted. It's stuff that hasn't really changed. Real estate investing is pretty much the same and has been for a long time. So get out there, do what you think is best, and be safe, guys. Have a Merry Christmas.